And remember, you know, on these stuff like Lucid, you know, remember to trail. If you're in this thing, remember to, you know, don't get too excited. You know, like this thing could go up another 50%. Don't just randomly sell everything into strength. It's better to sell a partial little bit too late than too early. Better to sell, you know, 10% too late than 100% too early. I'm not saying it will double, but it can. Like the volume is just insane. This whole sector is the leading sector of the market, and the volume is just insane. Like I haven't seen this type of volume since AMC back in May, June. Look at how similar Lucid looks to AMC. Or, you know, look at this thing. If you sold AMC here, like, oh, I got a nice move. I got a 50% move in a couple of weeks. Well, guess what? You would have gotten another 300% in the next week. I'm not saying Lucid is gonna do anything like it. Probably not, but, you know, it could realistically do, you know, much bigger move than this. So don't forget to trail. ENDP. Oh yeah. Yeah, it had several flags on the way up. I think someone mentioned it here, but I kind of dissed it because I thought it was already getting a little bit extended. But yeah, great job. Great job. This is why you need to build your own conviction and not trust, you know, rely on someone else. So important. You need to build your own conviction in these setups. Yeah, I will definitely size down on things before they close. I'm a little bit too heavy. I bought TTD. I bought these. I bought these oil ETFs, Gush and NRGU or energy ETFs. So I'll definitely size down. Whatever doesn't act well, I'll sell or size down, because we are getting a little bit extended in the indices. So you don't want to, you know, get caught with your pants down on heavy margin. You want to be proactive. Anything that doesn't act right with the indices, you know, straight up, it needs to be sized down. It needs to go. Or you need to move your stops aggressively. But if you're not using any margin, you know, don't worry about it. Just use your trailing stops. And yeah, AFRM, yeah. You know, the best stocks, they won't let you in. That's, you know, they won't let you in. And I'm so pissed, man. I had this thing on the EP here, like 97, 98 bucks. I had decent size. You know, it's up 75% since, but no, it stopped me out. And then I rebought it here, like I don't know, 112, 113, something like that. And it stopped me out. And now it's in the 170s. Yay. And look at this TTD. It's breaking a, you know, a long, like, year-long range here. And it's been building higher lows for like a year. You know, EPs are, not always, but many times these EPs are where, you know, a new trend starts. And today is a potential for that. It's already traded twice the average volume. It traded, like, if you look at it, the first 5 minutes or 15 minutes or whatever, 20 minutes, it traded the whole, you know, it traded average daily volume before it broke out on the 5-minute chart. So the volume was on the table before the breakout, before the opening range highs. So these are the type of EPs you're looking for. You know, preferably, you know, not always, but many times, you know, stocks that are already in an existing uptrend over the past, you know, 6 months or a year or 2 years or whatever. And then preferably they have higher lows for many months. And then they kind of break out of those big ranges on an EP. Or it could be earnings or some kind of other EP. Those are my favorite ones, where technicals and fundamentals converge. Stocks moving out of a base just days ahead of earnings happens all the time in a good market, all the time. Well, we didn't have a mania last November. And we're not having a mania now. Last November, we were just coming out of a range, and that was the start of a 4 or 3 month bull run of easy money. That was the start of 3 or 4 months of easy money, especially look at like Russell. Broke out early November and, you know, didn't top until early March. Yeah, look at where this Tesla found support. There was a guy on Twitter that says he didn't understand the logic of of moving averages. He thought, you know, technical analysis is crap. I told him, study 1,000 of the biggest stock market winners over the last 100 years, and you'll understand why I use moving averages. And, you know, who cares about the logic, really? If there's something that you will, you know, works over and over again, but you don't understand why it works, you don't pass on that, you use it, right? Because if you don't understand it, maybe no one else understands it either, right? But who cares? You go to the grocery store or you go buy a yacht, no one is gonna ask you, hey, did you understand why you bought the stock you made all this money on? No one is gonna ask you that. You have the money in the bank, no one is gonna ask you if you understood the logic behind the trade. What was my percentage return during November to March period? I don't know. Honestly, I haven't checked. I could actually check it. But it was probably, you know, 200-300%, if not more. No, more. 300 maybe. During that 3-month period. Yeah, exactly. I think, you know, trying to understand everything. If you know something works, you shouldn't overthink. You should just go with it. You don't need to understand why this or that is going up. The fact that it's going up and acting technically well, and especially if it's a leader, right? Because you have to understand, like, a lot of times in the markets and stocks, they many times fall, move before the fundamentals become obvious. Especially when it, like, these cyclical type of stocks. You know, when the cyclical type of names, when they start getting good earnings, they could already be up for, you know, 500% a year later, right? And then you get the good earnings. Peloton. Yeah. And it's kind of funny, the charts told the story even before. Have you noticed the stocks that gapped up? They had, you know, they were strong. They held up really well, or actually went up into earnings. You know, look at stuff like Lending Club, right? Look at something like, you know, this was strong into earnings and kept going on the next earnings. Damn, now I don't remember all these other tickers, but the weak ones, look at Roku, was super weak. Every pop was sold and it had earnings went low, even lower. Same thing, Peloton. Sumax like shit, probably gonna go lower too. That's, you know, you want EPs. When you have these EPs, and, you know, you want them to kind of gap up over the moving averages. Generally, a PTRA, look at where it got, you know, stopped, right at the declining 150. You know, strong EP needs to gap up over resistance levels. Or like these moving averages, preferably, most of the time. Sometimes they do work anyways, but, you know, if they can't gap up over the moving averages, if it's in a sideways or downtrend, it's a sign of weakness, not of strength. You know, stock can be up on the day, and it can be weak, and stock can be down on the day, it can show strength. Yeah, Roblox is also something I'm excited about. Roblox, ideal scenario, it gaps up over this 86 area, and even better if it can gap up over this 91 area. and then have good earnings, big beat, and big volume. That's the secret sauce. I hope the same for Palantir. This thing looks insane on the monthly. Like, it went up to, and like, this is a large cap stock. It ran like 300% in 2 months or 3 months. It could easily go up 50-100% on a good EP. And especially in this market, when you have market that's in rally mode, crazy things can happen. But don't get complacent. It's easy to start buying things and get sloppy, and you end up with full margin, and then suddenly one day everything is down 20% and you're sitting there with pants down. You always gotta keep attention. What's working, what's not working, what's showing weakness, what's stalling. Oh yeah, when you see like the was it one of these SHIB accounts? Some guy had bought $8,000 worth of SHIB like, I don't know, a year ago, and now it was worth like 6 billion or something. Like one of the greatest trades of all time. I mean, that's just insane. The things, seeing these things and reading about these things, it kind of messes with folks' brains. And that's why I think we're gonna, we have at least a good solid few months left of this bull run, both in crypto and in stocks. I think, people, you keep reading these crazy stories. You've seen Solana make an enormous move this year. You see SHIB, you see Doge. Like, it kind of fucks with people's brains, and people are like, what? Fuck it, I just buy some of this. And then, 500 million people around the world decide that, what? Fuck it. My retarded neighbor just got rich of the shitcoin. I'm gonna put some of my money in some of these coins too. Imagine being like someone who thinks they're really smart, really sophisticated, and then they have this like retarded family member or a neighbor or whatever that strikes gold on crypto, like some total shitcoin. Imagine what that does to some people. Some people don't give a shit. But I think some people would, it does something with their brain. Have I ever used the time difference between US and Sweden, bought EPs before US opens? You mean pre-market? I rarely trade pre-market. I found every time I try to buy, even if it's, if it's something really liquid, every time I buy in pre-market, it stops me out. Yeah, every shit stock is starting to move now. Yeah, that's how these, momentum cycles work. First you have the leaders going. Then you have the secondary movers. Then you have the tertiary, and the longer the run goes on, the more and crappier stocks start moving. And after a while, they're really gonna reach the bottom of the barrel. It's the same thing, playing out again. We haven't, last time we saw something like this was earlier, January, February this year. Yeah, exactly. That's how, and this is why, these things happen over and over again. It's just human psychology. It's human nature. If you understand these things, you have a skill for life, and it's not just in the stock market or the crypto market. It goes for everything. That's just how things work. Oh man, these are the times we live for, man. I'm not gonna lie, that for me personally, like the March to September period was challenging. It was up, it was down, it was up. I had a drawdown, then I was back to where I was in early March, and I had a drawdown again, then I was back to where I was. I just couldn't get it. It reminds me of 2015, where I went sideways for 9 months. It was the same thing. Except in 2015, I was a very unsophisticated trader. I had much deeper drawdowns. This time I had like a maybe 15% drawdown, or maybe 20% if you count with the money I wired out after the February-March run. But you know, it was challenging, and I missed a lot of big opportunities, man. I kind of... There were big opportunities, I just kind of missed a few and fucked, you know, just messed some up too. But now we're back in easy money markets. Oh yeah, absolutely. You need to have some... You can't just randomly buy or short stocks. Or shorting, you know, parabolics doesn't matter, but like buying, you need to have something that's a reason to go up. You know, pure momentum is enough, but if you want to get to the like 100 million level, you probably need to, you know, have some type of fundamental driver for it. You don't ever need to read a balance sheet, but you need to, you know, there needs to be, you know, something driving it, you know, a sector or a theme. Or earnings. Like you need to be able to read where the money is going. That's the #1 job of a trader. I don't care, you know, like a big part of these CanSlim guys, they look at what funds are in a certain stock or if the funds are going up. It's completely useless, guy. Like, it's like, oh, look at this stock, it doubled. Oh, look at this, the amount of funds doubled. Yeah, no shit, Sherlock. Talk about the trailing indicator. It's so funny when they talk about, oh, look at this fund. Yeah, the amount of funds increasing. Yeah, no shit, because the share price has been going up. It's so funny. Roppel says you get all the downside, but not the upside with GBTC. Well, have you verified it's true? Have you verified that's actually true? So let's look at the... Well, yeah, GBTC it is trading at 15% discount to Bitcoin. That's true. You know, it's up 120% from its July lows. Bitcoin is up 120%. So yeah, I don't see where you get all the downside and none of the upside. Debunked. This is why you always need to verify. Someone says something, you need to verify. Is that true? Especially when especially these things that take like 5 seconds to look up. Like I did with Bitcoin and GBTC right now. It took me like, what, 5 seconds? Okay, 15 maybe. I mean, it's not rocket science, man. It's not, it really is not. Simple stuff, man. Keep it simple. I'm gonna tell you why not be able to trade 24/7 is an edge. Now imagine, you know, trading. I'm not talking about like hodling, but literally like trading. You know, this crypto. It's open 24/7. You can never relax. You can never, you know, like take time off because it feels like you're missing out. It's always in the back of your mind. It's not an advantage. It's an illusion. It's an illusion. If you buy it right, you don't have to worry about it. Oh, Elon Musk is gonna sell his shares. Oh my God, Tesla's gonna gap down so much on Monday. I'm gonna sell my shares on the FTX exchange because it's such a big advantage being able to trade on the weekends. And now look at it. That's what's gonna happen more often than not. It's an illusion, guys. Forget about it. There's no edge in being to, you know, if you buy things right. And now shit is always gonna happen, but you're gonna get shaken out needlessly also a lot of times. You know, you see something gapping down, right? And by the time the market opens, like for the few, you know, the gap is gone. Everything is fine again. That's gonna happen more than enough. It's an illusion that you gain an edge. It's happened to me so many times from like really thin stocks that I can't sell in after hours of pre-market. They kind of gapping down in pre-market or whatever, and by the time they open up, they're well above my stop, right? And you know, if I could have sold it, if it was liquid, I would have sold it, right? So it's kind of an illusion. You think it's an edge, but it's not. You know what an edge is? Being able to shut off most of the trading day and on the weekends, and then be sharp as hell when the markets are open. That's an edge. Being able to trade 24/7, not an edge. Unless you're a computer. Unless you run algorithms. That's a different thing. Oh yeah. 24/7 trading means you have a 24/7 opportunities to get screwed. Yeah, I've gotten these business proposals. People want to buy, you know, develop an algo with me. You can't algo this shit. It's highly discretionary. You can't algo it. You can't run a statistical analysis on these things. You can't make an algo of investor psychology. You can't create an algo of, you know, people's brains breaking, seeing their dumb neighbor getting rich. Maybe you can make an algo of it in 20 years, but right now you can't do it. And we could be in a stage where a lot of these stocks, like let's take some of the stocks I'm in, like stuff like QS, BE, LAC, Lucid, you know, etc., etc., etc. They could, you know, they could just, you know, they could start speeding up. That's where big money is made. That's where the life-changing money is made. You know, if you catch some of these stocks that really, you know, speed up and do something crazy, you know, if you can just catch a few per year on, you know, like okay size, it's gonna change your life.